Hey traders, and welcome to the Jackrabbit Club. In this video, we're going to do a portfolio update for Saturday, October 5th, 2019. If you're watching this on YouTube, please understand you're just getting this about 30 to 45 days after it's been released to members. So if you want to sign up for real-time updates just like this, head on over to jackrabbittrader.com/membership and sign up today. If this is your first time here and you're watching this on YouTube, please make sure to subscribe, hit that notification bell, and of course, if you enjoy the content, hit that like button. We're putting new videos out every Wednesday to help you become a successful trader. So with that said, let's get started. So first things first, we talked earlier in the week about a shift in trend, right? We've been going back and forth with the idea that we're below and in a red bearish market cycle that you could see here on the right was indicated on the 24th. And then on the 2nd, or actually the 1st of October, I sent out this email, which basically outlines everything that we were looking for. Okay, a couple different scenarios, but basically saying that we've been trading below the 8 and the 21-day moving average. On the 1st, we had a big move lower, basically engulfing all the previous bars of the previous week. All right, and that was setting us up for a continued move. Now, we had already been long some SPY puts from the week before on this break below the 21-day exponential moving average. So we talked about a couple different scenarios. One was a continuation move, the first bullet item here, basically saying that if we can get a continuation move down into the 290 level, that we would look to take some profits off the table. And if that's exactly what we got, you could see here on the right on the 30th, or I'm sorry, on the 2nd, got to move down a little further and went ahead and sent out a couple more emails basically showing that we were closing half of our SPY put, all right, at the first touch of the trend line, and then said we wanted to continue to hold the rest, see if we can go push further down into that 282 level. So then the next email that I sent out was basically closing the remainder of the 295 puts as we got that push lower into that 282. We actually came down to 286, 69, 286.50 was the low. So we want to take all those puts off. We were locked in a profit on those, and that profit was about 52% for my accounts. Again, I trade 4 accounts, so 400, or not 400, 4 contracts, $1,336, bringing our year-to-date total to $13,908.50. So after we talked about that, we said, we want to look for a bounce going forward, and as you can see here, we got that bounce on Thursday and Friday. Okay, so we're already short. We saw this larger bar that on 10-1, so we want to see if we can get a continuation lower into trend line support. Got a little bit there, and then took a little bit more off as it pushed lower down into that level. Again, not trying to be greedy, not trying to time things perfectly. Said, all right, now it's time to see if we can get a bounce, because we were maybe a little stretch to the downside. Got a bounce, and sure enough, that bounce took us right to 294. And per my last email, we reinitiated a short position in the SPY. Head on over to that members section. We opened SPY November 288 puts at 520. I think I got them at like 518. And basically, that was saying that we were coming back up under the 8-day exponential moving average, and I wanted to use that. Sure enough, we pushed up a little further, but still not closing above the 21-day moving average. So what is the point of all of it, right? I mean, obviously, I'm sending you emails. I'm showing you exactly what we're doing. This is not to say how I can time the market, because I obviously can't, right? I mean, I put the puts on, not at the top. I don't even know if it's the top, but it's just an area that I'm concentrating on. And you could see that area a little bit closer here at that 294, which was, some resistance, some support, okay, resistance back here throughout August, held up a little bit earlier, not last week, I think the week before. And now here we are back to that level. So again, what is the point? The point is just that trading is not, you basically have to have a game plan, right? And this is what I'm trying to outline here. This is the part of the Jackrabbit Club that I feel is so important. It's not about the trades, or it's not about which trades to take and how to take them, and when we should exit or anything. That's not what I consider to be the most important part. And just from my experience, the hardest part about trading is just being able to do what you feel you need to do when you need to do it. All right. And what I'm trying to outline here is that I don't time these things perfectly, right? Like last week when we put on the SPY puts, we were down $500-$600, or at least I was, in those puts real quick. Okay. And it was because I mistimed the market. I didn't time it perfectly, but I knew where I wanted to get long or short in an area, and I was using the market as a guide to tell me where is the risk, right? Is the risk to the upside or the downside? And once we broke below the 21-day moving average, okay, right here on the 24th, I said, you know what? Risk is to the downside right now, because we have a process in place that identifies when we need to play defense and when we need to play offense, all right? And we followed through with it, and we're just trying to manage risk, right? 2 down days and big down days in a row, coming into a support area. Again, looking at a lot of different things, looking at uptrend lines. All right, so in that situation, I said, you know what? This is a spot I don't want to be getting shorter, right? I don't want to put more shorts on. I want to go ahead and now take my profits in those shorts, because I think we could probably maybe bounce from here. All right, and that's exactly what we did. We took a nice profit out of it, and sure enough, I got a bounce. I can't predict the future. I'm just going by levels of what I'm seeing in the charts and what we're experience-wise, what we're noticing with these market cycles. And sure enough, came right back up, rallied hard on Friday into the 294 level. Again, I'm down in all my accounts. If we go to the monitor tab, okay, here are my SPY puts. I mean, I'm down $512 in those puts. All right, I mistimed it, but my account was up nicely on Friday with that move. So I'm willing to take a little bit of a less profit to protect myself for any kind of rollover. All right, so again, it's not about as part of this Jackrabbit Club, it's not about the trades. It's not about what kind of, if you're taking a breakout or a pullback or whatever you feel works for you as far as setup. Take it, right? Let it be your own thing, and mold it, and let it, evolve into more of a process. It's not just about taking the same trades over and over. We could probably look today, if we look at our weekly setups, we run that scan. Let's take a look real quick. Personal weekly setups, and run that scan. There's 41 potential trades that we could take, and let's just pull one up, right? Let's say Celgene. We're not in Celgene. Let's take a look at SCELG. CELG. Okay. Maybe not. Maybe that's not the right setup. Maybe Apple. I know Apple had a strong week. Well, here it is. Apple's moving up hot, nicely. ATVI. All right, so the point is that we could always find a trade. Of course, I can't find it right now when I'm trying to show you one, but that's the point. The point is that if I go through this, I'm going to be able to find a trade that would set up based on our process. Here it is, right here, okay? DRE, Duke Realty. No idea what they do, but there's our setup. There's our breakout from last week. And if we took it, we'd probably be up a little bit. But the point is, the risk is not in our favor. The market conditions are not in our favor. So why put risk on the table when you don't feel like you have a chance to win? It's not gambling. We're not trying to time this where we're going to find the next best stock and it's going to rally 20% while the market's going down. That's how I used to think, right? I always thought, we're going to put as much risk on, because at the end of the day, a stock is going to act on its own accord and not really be influenced by the market. Well, I didn't have a lot of success when I did that. And when I started implementing these market cycles and really looking at the SPY as a whole and having a game plan for each and every day that we go into the market, and I share those as I did this week when I feel things are changing. We send out emails when we feel the market cycle is changing, and that's how I go about my day, right? I say, all right, here's what we're looking at for tomorrow. This is what we need to be aware of. make a game plan, a little bulleted list. If this happens, then we're going to do this. If this happens, then we're going to do this. All right. And then when it's actually happening, you can just go back to your notes and say, hey, I said yesterday when everything was nice and calm and didn't have any emotion in the market, that if this happened, I was doing this, so that today I'm going to do this. All right. And that's how you got to go about this, because if you don't have any type of game plan, you're no different than going to throw money down on a blackjack table or poker or whatever it is. That gambling aspect. That's not what we're trying to do here. All right. We're really trying to go ahead, be very methodical about navigating the market. Again, market came down. We took profits on those puts. We waited for a nice bounce. We got that over the last 2 days. We ended up reinitiating a short, just as we said. And let's see. Now, if we break back above the 21-day moving average, well, then you know what? We got to really evaluate what we are doing with those puts. Are we staying long or short those puts? Not short those puts, but are we staying in those puts, which is net short the market? All right, we're above the 8-day, so that has me a little concerned, but we're not above the 21-day. And I think once we get back above the 21-day, then maybe a little bit of a different story. But that's what I think going forward. I think that's really the takeaway, and the reason that I feel the Jackrabbit Club is a great service is because of the experience and the methodical approach that we're taking here. So just make sure that going forward, concentrate on what you think we should be doing at certain levels. If you want to share those with me, you're more than welcome to. My email. It's at the bottom of all the emails that I send out. Send me an email. Say, hey, I'm thinking if this happens, then maybe we need to do this. Okay, well, then we'll talk about it. Right. So with that said, again, had a good week, one good trade, rallied back with some of our long positions. Okay, you could check that out or in the portfolio, I should say. Let's open this up a little bit more. All right, so now we're down 1578 on those open positions. We've got one short SPY, and then we have about 17 other open positions. So we have a lot of risk on the table. And again, one of the reasons that I need to be aggressively putting some puts on that to protect that risk. So if you didn't hear, going forward, we're going to now start to implement $0 commissions. I am in Thinkorswim and TD Ameritrade. I think E-Trade and Charles Schwab all reduced their commission fees this week. So that's great for us. Obviously, I'm sure there's something that's going to have to take a place of all the commissions that they're missing out on. But this is great for everybody with smaller accounts. So you can define your process. Maybe you're only making $30, $40 on every trade that we're taking here, but you're not getting eaten up by commissions at $5 a pop in and out. So I think it's a great way for people to use these very robust platforms with charting, as opposed to like a Robinhood or some of the other low or zero commission brokers that were out there in the past, and really try to define a process that lets you just concentrate on the process itself and not worried about the $5 commissions that are chewing through all your open profits. All right, so that's where we went this week. Let's see where we're going to go for next week. All right. So we basically, we've touched on this. We had the rally back over the 8-day, still under the 21-day. Still, in my opinion, in a bearish market cycle. I've changed everything in the member section to reflect basically 50-50. I think we can go, obviously above the 21-day, or we can very easily roll back over, especially for the fact of we're against this very strong resistance. So if we take a look at the SPY, we look at the daily, we're against this 294 area, okay? And that's where basically we closed the week. So, again, anything can happen. Do we roll back over and use 294 as a resistance level and for a test back to 282? Or was this it, right? Was this the pullback we needed? But the thing that we need to be aware of here is that there is a very strong double top right now at this 302 area. You could see we hit it back late July, and then again the last month or so in middle of September. All right, so double top there, some strong support down at 282, and really we're in the middle of the range, right? We can easily go to 302, which is about $8 higher from where we are now, or we could easily roll over and retest that 282, 283 level. And basically, depending on how you draw these, if you wanted to come in here and draw to the low at 284, I think that's a valid support level as well. So realistically, if we want to go higher, we need to hold above 284.65, which is the low from Thursday. All right. If we think we're going lower, then I'd be watching the low from yesterday, this 291.05. It's very possible. What I've seen in the past is that come Monday, we'll have a very small candle. Okay, something very similar to what happened here on the 12th or even here on the 19th. So a very small candle that maybe fills in this little piece of the triangle right in here, right? This area right here. Okay, small candle. And then realistically, then the next day roll over, take out the lows from that candle. And then if that's the case, then we can use the high from that same candle as the stop level for our put. So we're kind of just letting them work right now. Again, pretty long the market, and was really itching to make sure we hedged against it. If we go over to the weekly chart, you can see that we still have this broadening pattern, big down week hammer bar on the weekly chart, but I can't tell you that these work out in the past as true reversal signals. You could see here similar situation happened here, all right, where we came up in the middle of May, had a nice big hammer, and then sure enough, basically took out those lows from that week. Similar situation back here in August, all right, hammer down, and every week tested the low from the previous bar. So based on this, I wouldn't feel very comfortable until we were over 298, but may want to just stay within the range of this weekly bar, which is between 298.59 and 284. So I think there's some room to play with in here, but still not loving this overall pattern that we're seeing develop. So just something to keep an eye on. Take a quick look at the others, the Qs. Okay, green candle, all right, came right into that 181.62 level that we were using as support. So again, anything over 190.74 basically confirms this hammer bar as a reversal bar. All right, but for now, just looking at essentially a range between 194 and 181. The Dow, so the diamonds, DIA, right, similar situation, still hanging out between the 273.50 and 255 area, held this uptrend line, which is obviously one of the areas that we want to hold if we want to go higher. Okay, and last but not least, the IWM, the Russell, you can see came right down into support 145.36 and hanging out in this range between 158.50 and 145.36. So we are testing the lows of a lot of these ranges, so that is a positive, but they need to hold. All right, and if they don't hold, we could be in some trouble here with some significant moves to the downside. So we just want to keep that in the back of our mind. Obviously not trying to predict anything, just knowing where we are within these patterns and within the market itself. So going forward, we're going to stay really conservative. I'm not looking to add any new trades this week. What I do want to do is I want to take a look at our current account positions and see if we have to do any management to those positions, and then we're off, right? And that's all we need to do this week. Real simple, real straightforward, and again, it's not a flashy process. It's just one that is consistent and works. So here we have Adobe, all right, came down, tested the 270 level one more time. It continues to chop around in here. A lot of supply, or I should say a lot of demand in this range. You can see it. Sellers push it down, buyers buy it right back up, right? Sellers push it down, buyers back buy it. All right, so it's been happening over the last 3 or 4 weeks. Let's see. At some point, somebody's going to lose, right? At some point, there's no more money to be put into Adobe, and there's no more sellers to push it down. So which one happens first? We'll figure it out But once we break under that 270 level, we're out of this trade. ALL. And the other thing that we have to be aware of too, and I don't talk about it very much because I don't use them to trade around, but earnings season is approaching, and you can see that on my watch list here with all the blue and red circles next to the names. All right, so these are all ones that are reporting earnings. And if we go into here, I'll just turn them on real quick so you can see, and we'll change this to our account positions. Here it is, current account positions, and here you have all the earnings that are reporting. And it looks like actually, let's see, that's pretty funny. See, again, don't even know about it, but Thursday, Pepsi and Costco both reported earnings. I know Pepsi moved higher this week, so I'm assuming that's because of earnings. But this coming week, JPM, CSX, DHR, and STI all report earnings. So you may get a little bit of some additional volatility in those names this week. But again, not something we really look to trade around, with our positions. If we were up a lot, as far as open P&L on some of those, then I would probably say let's take some off before earnings just to play the odds against us, and so we don't have a big gap down and lose out on a lot of our profits. But we don't really have that situation right now, so we're just going to let everything run. With that said, back to what we were starting with. So Adobe under 271, we'll get out. ALL, all right, moving higher. We entered this position. Actually, let me turn those on. Entered this position at 107.57, now trading 108.46. Stop down here 101.23. AME, you could see came back up, right, and hit that 91 level and pulled right back, all right, down all the way down to 85.29, closing the week at 88.83. So you could see, these resistance levels mean something, and we're down 166 on that trade. Comcast has been pulling back, right? Came right back into trendline support this week. Still have a stop down here at 42.15, but if we can start to roll back over, take out the highs at 47, then we'll use this 43.50 as our next stop level. If not, then we wait till we see what happens at 42.15. Costco, all right, just working its way higher. This almost looks like a little bit of a pullback trade. If we can get confirmation over 291, or let's say 292, a close above 292 next week, then maybe this is a pullback looking to go back to the highs. Maybe we trail stop up to be real super conservative with this one, super aggressive because of the market cycle we're in. But let's see. Right now, nothing to do. Current stop 262.50. CSX, all right, pulling back. Here was that pullback trade. Ultimately, now moving to the lower end of the range, under 64. We're out of this trade. We're down about 380. DHR, again, as many times as we talk about it, it really just amazes me when you see a stock come down, basically hit exactly where support was, and then bounce back higher. So here that happened in DHR. Remember, we got in this on this breakout back here on the 16th, entered at 145.30, came all the way down to 135.34 this week, bounced hard, and now at 141.65, right back in that range. Hilton, just holding that support level at 90.42. Remember, we added to this position on this break of this downtrend line, thinking we can get back up to the $100 level. Hasn't done it yet, but still holding above 90.42. Info, again, breakout, really hasn't done much since. A little bit of a move higher this week, but still in the red on this one, as we are with most. JPM, okay, came right back up, breakout, and then quickly failed. And here we are, middle of the range, or back in the range. Anything under 105.44, we'll be exiting that trade. Mondelez, all right, breakout, quick pullback, couple days in, or a couple weeks inside that range, and now here we are breaking back above the highs of this range. So maybe this wants to start making its way higher. 53.62, which again we tested this week, is our support and our stop. So Realty Income, Basically broke out, came right back into the range, and then since then has worked its way higher. No real indication of where we could trail a stop here. Maybe we could take it to 62.30, but for right now, not really looking to do much on that one. Pepsi, all right, new breakout here. So this is one we can probably trail our stop to. Because of the situation that we're in, where we have a red market cycle, I'm not going to be adding to this trade. This would be, if we were in a green market cycle, a spot that I would add to, but we're just going to trail the stop in this case and bring it to 133. All right, anything now under 133 will get out of that trade. Raytheon, still wishing I took some off when we came up to 205, but I didn't. Here we are pulling back, testing what was, remember, previous support or previous resistance becomes new support. All right, looking maybe for this to roll back over and head up to 207. SNPS, all right, broke down, really consolidated for the last 3 weeks. Still holding above 125.80, but back kind of in the range. Would like to see this one obviously turn back to the upside. SPY, those are our hedge that we talked about. STI, all right, broke out, has consolidated since, so still looking for our first target right around 73. And last but not least, Visa at one point this week was below our stop of 171.83, rallied hard on that bounce Thursday and Friday, back above it, and then again, let's see if we can roll back up and head on to the upside. But that's one of our biggest losers, right? Visa and Adobe are our two biggest ones. So that's it for this week. Again, just want to make sure that you guys are understanding that we need to have a game plan going forward. Want to make sure that those emotions stay in check when we're in these situations, and we're really managing risks. So again, I hope you enjoy this one. Not much to do, not adding anything new. Just want to see what happens with the market, and we'll add risk when we feel we're necessary. But for right now, hedging the portfolio going forward and just monitoring those stops. With that said, again, if you're new and watching on YouTube, please make sure to subscribe, hit that like button, and of course, ring the notification bell. If you're a member, we'll see you next week for another update. Take care.